Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome and welcome back, KS family. Let's run the numbers. Bitcoin currently up 1.35% to 38,220. Ethereum up 2.65% to 2606. From my 30 plus years inside financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. There is always hope, and the sun will come out again. Rule 781, crypto technical analysis is a skill and it's also a philosophy. The philosophical component of CTA is all about real wealth and maintaining a positive excellence life trend, having integrity and decency, kindness, inner and outer peace. These are really, really important things. For example, if a crypto technical analyst looks at a particular chart without integrity, they can basically make it look like anything they want to. We simply don't do that. We have integrity as a core value. But it's more than just having integrity. Having kindness and decency, using understanding to solve problems, this is the way to go. And that takes a lot of courage and fearlessness, especially in the face of adversity. Crypto technical analysts understand the DNA of money. They know there's a vast difference between riches and wealth. Riches come and go, but wealth stays, because wealth is an expression of the uniqueness expressed outwardly and a contribution to others. A lot of people look at the crypto market as a way to get rich quick. You may do so, but if you get rich quickly, riches are often lost because you need to be the person that can retain wealth. Crypto technical analysts focus on maintaining and increasing wealth, and focus on being a financial blessing to yourself and those you love. There's a very big difference between retail investors and traders and professional investors and traders. Professionals always buy, always seek to layer in to extreme fear positions and seek to scale out when there is extreme greed. Retail traders and investors do the exact opposite. When they see the market as very green, they get a sense of certainty that things will continue going that way, and that's often when the market turns against them. Professionals always go the inverse direction. They seek to layer in. This smart money mindset is incredibly important to understand. When people layer in at levels of extreme fear, absolutely it can go lower, but those lower percentages actually work for you long term, and I'll explain that later on. But when you buy up the top, you may have to hold a very, very long time for price to come back and meet you. What we do is that we focus on buying low, and we do that by buying fear. Rule 45, no alt can escape Bitcoin's gravity. We can see the market right now is pretty green. What does that mean? It means Bitcoin is coming up. If Bitcoin was going down, what would this heat map look like? Please let me know in the comments section on YouTube. And where do you think the crypto market is going? That's also something really good to discuss. What we can see here is Bitcoin is overcoming levels of resistance, and it has had quite a few goes at getting above these levels. It started to turn 37,406 to support. It does have a line that it needs to get through, which is 38,935, and then the next target level is 41,933. But knowing crypto, anything is possible, so we always make 3 in advance probabilistic choices. We know what we will actually do if the crypto market goes up, down, or sideways. Many people coming from a stock market and forex background expect the crypto market to be far less volatile Unfortunately, crypto is incredibly volatile. It has 20 times more volatility than the stock market and Forex. For example, over the past 82 days, Bitcoin has come down a maximum of around 51%. That's a long way down and over a long period of time. That's why many people are calling out for a bear market. They do not understand one fundamental rule. That's rule 4. Price moves in waves. Price is always going up and down and up and down and up and down. That's what it does all the time. It doesn't matter if it's a bear market or bull market, consolidation, it's irrelevant. Price is always moving up and down in a wave. There's another thing that many people don't take into consideration. When price comes down significantly on a good project, that's the important thing. It must be a good project. But have a look at Loopring. It's come down 83.2% to this low point, and it's been going through Bitcoin's price action, Bitcoin's gravity for all of that period of time. What happens when price recovers? Is it an 83.2% increase? This is how people think. And 83.2 is not bad, but it's in fact 494.53% from that very low point. This is exactly why professionals layer in. They're looking to layer into these particular projects, and it's because they know the further that price actually drops on a good project, the more price will actually rally just to come back to a break even. I've asked a very innocuous question. I said, what is the percent increase? It's 494.53%. And this is exactly why professionals don't care about holding on to losing positions. And this is a very big difference from the stock market and Forex to the crypto market. The stock market and Forex seek to gain small incremental percentages and seek to actually abandon ship when price moves against them. What we do in crypto is very different. Crypto is so incredibly volatile. We always trade at spot. And spot means that you just swap your crypto for another crypto. You're not under leverage because people friends don't let friends leverage trade, and we don't trade under leverage in our CTA community. What you basically see with crypto, and this is a very, very big difference from the stock market, when crypto takes off, you often can't get in. It just explodes exponentially. It is an exponential asset class. I have created new technical analysis specifically and wholly designed for crypto technical analysis, for crypto price movements. This supersedes any TA or any technical analysis that is imported from either the stock market or Forex. And I shared that crypto technical analysis inside the masterclass. The masterclass is available from www.cryptotechnicalanalysis.org. I'd like to thank the many people that wish to become ambassadors. CTKS Ambassadors, it's the highest honor in crypto technical analysis. In tomorrow's episode, I'll actually be awarding the first 10 ambassadors. Congratulations, everyone. CTKS Ambassadors have shown their dedication and commitment to crypto technical analysis in all its facets, especially the real wealth aspects of integrity, decency, and kindness. These people embody crypto technical analysis as a professional skill. They know what they're doing. They've been through the masterclass or have made sufficient progress, and they also embody the kindness-based philosophy of crypto technical analysis. A lot of people say, why do you need to be kind? Isn't it just making money? Isn't that what it's all about? There's a lot of people who make money. Scammers make money, for example. We don't like scammers, and we don't prefer not to hang out with anybody that doesn't have integrity and kindness. From many years lecturing first and second year statistics, I've seen that a lot of people can misrepresent numbers. Our crypto technical analysts do not do that. They have very rigorous standards. The CTKS Ambassadorship is continuously awarded. Now, what does that actually mean? It means that it can be withdrawn. One thing that I do, I always look at every single comment across all aspects of social media inside the masterclass, inside any groups, and I'm always assessing ambassador status. I am looking for people who are not only knowledgeable but are kind and have integrity and decency. These are very, very important things that our world needs more of, not less of. And it may help to also go to the testimonials section and just understand why I created this masterclass in the first place. I'm basically transferring my 30 plus years in financial markets and my very specific skills with crypto. Those specific skills are picked up inside the masterclass. There are many foundations. The masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis. It basically introduces CTA or crypto technical analysis for the first time. It has many revolutionary new methods of analyzing crypto. There is a foundations section and followed by a trend section. Foundations is all about paving the way, paving the basic skills that you need. It's not an easy section to get through. Foundations are really important. If I could simply hand you 3 decades plus of experience, I would do so in the easiest way possible, but it does take application and effort, and I've done that as easily as possible for you inside that foundation section. Then the trend is very important. This is all about what happens to Bitcoin in relationship to other markets. And we know Bitcoin's gravity impacts every single alt. And then it gets into timing. What do we actually look at to what projects are good from a technical perspective? The most important area and section, I believe, is real wealth. Real wealth is critically important. There are many rules that people unknowingly violate every single day, and their success is hampered by that. This is a summary of over 40 years worth of research and development into the professional development or personal development industry. But it's summarized and applied to crypto and the exponential nature of crypto. The final section is the trigger section, and this is when to buy, when to sell, various methods, and using live trades. And then we have a living masterclass section where I update and always am creating new charts to share with the community. This is not like any other masterclass. I've had a look at other masterclasses out there. They have far less content and they just rebadge normal stock market and forex trading. And that's a recipe for losses in the crypto market. The other thing, ambassadors offer very steep discounts on this price, so they're very valuable to know. So tomorrow I'll introduce the top 10, the first 10 ambassadors. We can see Bitcoin has been having a little bit of trouble getting across this 38,935 mark. It's come up before around the 26th of January, was rejected down, gathered strength, and is making its way slowly and surely by all stretches. We need to get above this 38,935, and that will signify that Bitcoin has the potential to turn around. The entire crypto market, I believe, has relatively bottomed out, but we always must make the improbability choices. What if it hasn't? What if it takes another leg down? That's why we always make a choice to understand what we are doing in 3 positions: up, down, or sideways. Turning to the KS model, which is a crypto technical trading model based on institutional price psychology, we are still in the bull market psychology of the current segment of run. We always get 3 segments: a bull market, psychological sunshine; a bear market, psychological darkness; and consolidation. Consolidation is the difference between the capitulation event of the bear market and the start of the next halving. In around 118 years, the halving cycle will be done. That's the estimated date at which all Bitcoin will be mined. And then the model will just change over to a full transaction-based revenue model for miners. So we can think 118 years is the 4-year cycle over. But we know that there never was a 4-year cycle. It's never ever been 4 years. And we've talked about that extensively inside our community. By the way, Masterclass students, you will get this chart on TM2. What we actually see is there's been a range of black swans. These black swans have pushed down the price. For example, Evergrande. We've had a bit of fun with that. The Fed tapering, Russia and Ukraine, interest rate hikes, all sorts of weird and wonderful things have pushed Bitcoin down. What happened the last time we had a black swan in the market? March 2020, the market absolutely tanked, but it came roaring back. This kind of price behavior was not anticipated by many people, but that is exactly what happens when we have black swans. Price comes back. That is the concept of a black swan. It's just a blip. We always get black swans. You can see many black swans occurred at various stages. This was a US government shutdown that caused this big spike down here in 2013. We're always getting them, but a lot of crypto technical analysts that use stock market and forex trading rules only simply look at the chart and they do not factor in black swans. That is a very dangerous proposition. I'd like to thank Ted Boyston. Ted is a very nice guy and very clever. He's done a lot of really good work in the crypto space. I recommend you following him on Twitter. Ted put together this particular chart tracking the KS model. What we can see, we're down around 37,883 now. That's just about here in terms of this deviation around the line. We're still actually tracking the 486,000 on the 25th of May is possible, and there's a range of values. A lot of people don't understand market capitalization. They think that money has to flow into a market to actually move the price. If you've looked at some cryptos, you will see that that is purely not true. You can get incredibly high gearing ratios between $1 going in and very large increases in market cap. This happens all the time in the crypto space, and there's a lot of people that don't understand that fundamental factor that actually plays into this estimate. What we can see here, we're down around here at the moment. The issue is that we're still tracking that particular price. We're expecting an exponential blow off top. That's what an exponential blow off top actually looks like. One thing that typically happens with people is they say, well, you know, this price in white is not tracking this price over here, so it must be wrong. That's an addiction to zone 1 and zone 2 thinking. I developed this particular chart because it's really important for people to understand addictions to certainty create terror. This is KS zone analysis, the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 1 is the panic zone. That's characterized by people buying at market. Please never, ever buy at market. It is very unprofessional, but not only that, it will cost you a fortune. Buying at market is the worst thing you can possibly do. Zone 2 is the blame zone. Zone 2 behavior is not permitted in crypto technical analysis. We need to move past that to patience and rules. Crypto technical analysts exist in zone 3 and zone 4. It doesn't mean that people can't get angry from time to time. Of course, that happens. But the concept is that we use understanding and patience to understand what the cause of the conflict is, and there are many rules that govern our behavior. We also have probabilistic fearlessness. We trade the chart in front of us. Certainty is all about indicator addiction, as many indicators as possible on a chart. It's about perfect timing and capturing everything. It's about so many things: FUD, fear, uncertainty, and doubt, and FOMO, fear of missing out. It's about sleepless nights and incredible levels of stress and feeling really, really bad. That's why people move into zone 2, the blame zone. Those particular areas I call the light switch effect. People are switching in and switching out of crypto, generally at the wrong times. Zone 3 and Zone 4 is all about a dimmer. You gradually lean in and you gradually lean out. You lean in to buy at successive layers down, and you have what is called a 10-5-10 volatility fund. You actually use volatility for your advantage. Up here in Zone 1 and Zone 2, people getting really freaked out by volatility because it's biting them. In Zone 3 and Zone 4, we actually leverage volatility. That's why we don't need to use any actual leverage in the market. We don't need to use derivatives, we just buy at spot. Having patience and rules is really, really important, as is accountability and learning. But being consistently profitable inside Zone 3 is simply not enough. There's a story of Jesse Livermore, the inventor of day trading. He basically created so many techniques and methods and tools that he became famous. And unfortunately, Jesse Livermore took his own life because he had no meaning. At one stage, Jesse Livermore was one of the richest people on the planet. This is really important to understand. Many people turn to crypto to make a fortune, but without meaning, it's just another form of poverty. That's why the KS Real Wealth segment is so incredibly important. Having inner peace, fulfillment, authenticity, being who you actually are, but doing it in a kind way, and having integrity and having understanding. That is what it's all about. You have a very meaningful life in Zone 4. Zone 3 is about consistent profitability, and sometimes that does take time as well. Professionals don't mind holding on to loss. If you look, for example, at Michael Burry, who was famous for the 2008 shorting the housing sector. If you've ever seen the film The Big Short, you'll know exactly what I'm talking about. He held on to a loss until it made him billions of dollars. Please be aware, that's how professionals work. Amateurs and people who are just new to trading and investing, when they see any form of loss, they'll typically light switch out of it. Professionals have a high tolerance for pain, because we know it's just a paper loss. It's only real when you actually sell. We also, as crypto technical analysts, look across all markets. This is what the trends section is all about. Masterclass students, you will get this live chart in TM6. We look at the fear gauge inside the market. The fear gauge, the VIX, is backing off. Generally, when it backs off, it keeps on backing off. And this is a characteristic of the VIX. I traded the VIX for many years. It's a very spiky animal, inclined to exponentially blow up and then exponentially implode. What we see is the NASDAQ 100. It's consolidating at the moment. When we look at oil, oil is coming up. This will drive inflation fears. Bond prices are starting to bottom out and starting to move higher. There's a resistance level up above that it will probably hit and get forced down from. It could decay lower, but I think we're going to get a bounce in here. When we look at bond yields, which are the inverse to bond prices, they're hitting a level of resistance and backing away from that. They could come down, hit this level of support, and then rebound. We just need to keep our eye on things, but these are the way that resistance levels and support levels actually work inside the market. We can see gold. Gold has decayed, seriously come down in price, hit a support level and done a technical bounce. That's what we were talking about in yesterday's episode. What does this actually mean? Gold decaying means that geopolitical tension is being eased. The gold traders know that there's not much potential upside in this, so they're exiting their positions. That doesn't mean that they're not coming back in at levels of support. There could be a degree of profit taking here, but it's so important to understand how gold actually works in the financial system. The DXY, the US dollar currency index, just absolutely blasted through its resistance, and it's above that. The expectation is for higher DXY. The US dollar is strengthening, but does that mean it will just go straight up? If we look at this particular once resistance, now support level, what you typically find is a big push through, a comeback, and a retest, and a resumption off. That's classic stock market technical analysis. What you see inside crypto is completely different. We can see more clearly here gold and silver, inverse DXY, and Bitcoin. Gold, silver, and the inverse DXY are collapsing downwards. The inverse DXY can give some indication as to where metals can go, and it's been doing a good job of that. Masterclass students, you will receive this live chart in TR23. We notice that Bitcoin is coming up. The really important thing to understand, when people just get into crypto, they only want to look at their beloved alt and just give it a bit of a cuddle and say, beloved alt, how are you going? What are you doing right now? The answer is your beloved alt is doing what Bitcoin's gravity is exposing it to, and that is really important to understand. Many times people look at their alts and say, I don't understand, the fundamentals are so strong. Why has it just gone down 85%? That is because Bitcoin's gravity. If you don't look more broadly across the market, you will actually get wrecked. It's really, really important to look through the trend, and that's what we're doing right here, right now. When we look at C19 cases, we can see there's about 373 million cases, 5.7 million deaths. And we've had a very big spike in the daily new cases. We've seen very numerous countries actually increasing their death rates recently. It's just an absolute tragedy. I know that some people don't believe in C19 at all, but you can't deny the statistics. When we look at the new cases yesterday, we had 2.64 million cases. And when we look at daily new confirmed C19 deaths, we can see that a number of countries, for example, the US, is increasing, Russia is decreasing, Canada is spiking up. It's really interesting to see that Australia has had the largest number of increases in deaths from C19 related viruses, and nobody's talking about it in the media. Israel, big increases. UK starting to level out. European Union, France, you can see that going through, wow, what a spike in Ukraine, at least it's coming down. Denmark is going up. This thing is far from over, unfortunately. Germany going down, which is great. Belarus, Switzerland going down. Vietnam, the world is trending upwards. El Salvador trending upwards. And we have a couple trending downwards, which is fantastic news. But we have to bear this in mind. Why do we even look at this? Why do we care? Aren't we just looking at crypto? When people understand the economic system, and this is all about trend, if we get increases, for example, in stringency is all about closures, school, workplace, travel bans. When we have increases in stringency, it's often related to government policy having to come in and stimulate the economy. Just be aware of that money printing can have an impact on crypto and how crypto performs. So we look across this every day because we want to understand what's going on. It's really helpful to look at the transportation indexes and see how Bitcoin is actually reacting to things as well. Masterclass students, you will get this in TM3. We can see the airline index was just about to break out from resistance, but it got rejected. and now it's on the way down again, and we can see all the transport indexes actually under suffrage at the moment. Everything we do in the community is crypto-centric. What we understand is that all the markets are linked, and we need to understand how those markets are moving. Also, many times government bills will get legislated and passed, and there will be many news outlets that talk about a wide variety of things, from inflation to transport to the dollar, to gold, to bonds, to bond yields, to bond prices, to the VIX, the main indices. You know all about that. Nobody can pull the wool over your eyes. For example, comparing Bitcoin to inflation expectations, we can see inflation expectations have been coming down, and from around the 14th of November, Masterclass students, you will get this in TM4. What we also see is as the markets move around, inflation expectations move with them. This is really good to know and to understand. A lot of policymakers say that inflation is absolutely out of control. Is that what the numbers show us? Not in terms of the break-even inflation rate. This is a forward-looking measure. What we can see is the inflation rate actually coming down. This is the difference between listening to the news and running the numbers. We must always run the numbers. That's what we do. Another good thing here, I've included the CPI, the Consumer Price Index. You can see the CPI is going up, and it's been doing so for quite some time. But you can also see it's a very lagging measure. A lot of these government statistics come out every month or every quarter sometimes. Just beware of that. This latest date is at the end of November. We also understand that different markets in different parts of the world actually make a difference on the attractiveness of investments, and all investments have investment substitutability. Bitcoin is just one place that people can put their money. When we look at the Chinese property market sentiment, what we see is big firms, for example, these 7 largest firms in China have net debt exceeding $1 trillion. Evergrande is the one people talk most about. We can see Evergrande's share price starting to bottom out and starting to turn around. Many of these other share prices are turning around as well. Some a little bit wobbly because they have more exposure to international markets than others. Masterclass students, you will get this chart in TM5. Also, looking at the Russian market, the inflation rate inside Russia is 8.4% and the interest rate inside Russia is 8.5%. Good to know. I put this chart together. Masterclass students, you will get this in LV8. This particular candlestick chart is the major Russian index. What you can see, these other companies are the major companies, the top companies inside Russia. We're starting to see a turnaround in the price here. What does that mean? You actually join probabilities together. You can see, for example, bond prices have bottomed out, but they've been falling, which is good. Gold has been soaring, but that just plummeted. Bond yields starting to come down. What we're actually seeing is a restoration of confidence back within the Russian market. What happens is when war breaks out, markets really suffer. There are many people who say, show me the chart and I will tell you the news. That's what we're about. Just like in life, opportunities reset daily. This is Rule 28, and a very beautiful rule it is. Every day is a chance to begin again. You can be who you want to be. Being authentic is really important, so long as you do it with kindness and understanding. If you don't, life will make you suffer. Masterclass students who have been through the Real Wealth section, you understand this very deeply. There are a lot of tests that life throws at people, and those tests actually determine if people get promoted or demoted. If you want to lash out at other people, you will get demoted. People can be the messenger of the demotion, but just understand it's life, not other people, and it applies exactly in the opposite way. When you're kind to people, when you seek to understand, you will be promoted. It's always easy to get along with people who are easy to get along with. This is especially true inside relationships, inside work, family. You can just think about it, friendships. People don't really gravitate towards toxic, acidic people. If you are feeling like you may have a little bit too much toxicity in your life, please have a look at the Real Well section in the masterclass. It is an absolute life changer. Many people have said so. Let's have a look at the first 8 cryptos. We can see Bitcoin has been coming down, like we said, for 82 days. That's a really long period of time, and you always get tired close to home. Think about if you go out somewhere or you've done a really long car trip. Where do you get most tired? When you're close to home. And it's exactly the same with the crypto market. When price comes down over a protracted period of time, many people seek to actually sell near the bottom because they just expect it to keep on going. What we do as professionals is we layer in as we're going down. And the concept is we never know just how far it can go down. But the lower it goes down, the higher the resulting percentage increase. For example, please remember the concept of loop ring. It's really important. Loop ring's price over 73 days went down 83.2%. When loop ring recovers, and it's just a question of when, not if, when loop ring recovers, we'll be looking at a 494.53% gain for that. That's why layering down at support levels is such an important thing to do. You can find the price can go lower, but this is just part and parcel of the crypto market. It's critically important to understand the role that Bitcoin's gravity has. As Bitcoin moves directionally, so too does the entire crypto market. You often get about 1% of cryptos that will move against Bitcoin's directional movement, but they very often, if not always, will get whipsawed back at some stage. It literally is gravity. We can see Ethereum has been under pressure because of Bitcoin's gravity. When Bitcoin starts to turn around, Ethereum will start to turn around, but more so than Bitcoin. That's what we see all the time in the crypto space. There can be an initial flight to safety. We've seen a very large decrease in Bitcoin's price. It is possible that more people will put their money in Bitcoin relative to other alts. But don't forget, gravity is still gravity. It will always play out for the positive and for the negative. We can see Binance Coin just doing that technical bounce. Solana is still under pressure, but the entire market is under pressure at the moment. Cardano under pressure as well. XRP following Bitcoin's fingerprint, as is DOT. We can see Luna. Luna came up strongly as Bitcoin came down, but what happened to the gravity? As soon as Bitcoin's gravity kicked in, it pulled Luna down with it. This is why I always say beware of Bitcoin's gravity, and also beware of changing of the guard. I mentioned this a little while back that I thought that we had this potential with Luna to actually change, but it's a really good project. So this actually opens a short-term window to scale in. I think it's a really good thing. We can see Doge is under Bitcoin's gravity, and this is really important to understand. All of crypto is under Bitcoin's gravity. If we don't look more broadly into the trend, we will not understand things, and your beloved alts will suffer because you'll get in at exactly the wrong time. Looking at AVAX, it's coming into alignment with Bitcoin's gravity. SHIB as well. What do we expect when actually Bitcoin starts to move back and starts to go positive, which it will, because we know all price is moving in a wave. It will get better, absolutely. Matic, we can see Matic was unaligned with, disaligned with Bitcoin's gravity, and then it's come back into play. This is what I call a changing of the guards when it inverses like this. Litecoin has been following Bitcoin's gravity very, very closely, and we can see Uni has too, but it's not had this big kick up here that we would expect. We can see Algo still under pressure, and Chainlink. One thing that just you want to bear in mind, when these cryptos start to rally, they will do double-digit % gains day on day, and you don't want to feel FOMO with that. That's why I always say it's best to buy at levels of support as price is coming down. That's the ideal time to get into crypto. By the time that crypto has turned around, you probably lost the opportunity. For example, have a look at Algo. We saw here Algo was coming up. When it gets above a certain level, it just parties, and this is the way that all cryptos do. A lot of people from the stock market say, I'll just wait till it gets above here and then I'll enter. If you're tracking too many opportunities, you won't get that opportunity to actually get in. But you'll also get in at obviously far higher prices because crypto is an exponential asset class. Looking at the next date, we can see Bitcoin Cash under resistance but following Bitcoin's gravity. Tron following Bitcoin's gravity. Decentraland Mana following Bitcoin's gravity to a T, as is Axie Infinity. We'll come back to Rose in a minute, dig in there. VET under Bitcoin's gravity. Can you see why we spend so much time looking at the macroeconomic factors? If we don't, we're going to be in trouble. We can see Atom has been rejected again and is moving down. Let's keep our eye on Atom. We got very interesting thing. We can see that Atom rallied, and you can notice that a couple of others have done the same kind of fingerprint. That's why we're actually looking at so many. Some people say, Ken, why don't you just look at one coin? For example, just look at Matic. Okay, we could certainly do that, but you'll miss the larger picture. Matic's gravity is controlled by Bitcoin. If you know what's happening with Bitcoin, you know what is happening with Matic. You can get a change in the guards, absolutely, but you know with 99% probability what is going on inside the market. If we look at FTX token, it's following Bitcoin's gravity, but look at these surges. This is a strong crypto. That's what we want to focus on. In crypto, you focus on strength. Having a look at Rose. Rose is starting to bottom out, which is really cool. We expected Rose to come down to around this level. It went a little bit further down, as did the entire crypto market. And this is what it's all about. In crypto, there is no certainty. A lot of people want certainty, but you'll never get it inside crypto. You can only do probabilities. Now, what does it actually mean? It came down a little bit further, and is that a good or a bad thing? That's a fantastic thing. When it goes down further, it goes up further, especially if it's strong. What do we see here? We had an 87.87% rally, followed by a 53.57% rally. When it comes back up to this previous high, what percent increase are we looking at? We're looking at around 114%. The lower it goes, actually, the better it is for us. Looking at the next day, we can see EGLD under Bitcoin's gravity, as is ICP. Filecoin is under as well. And we can see SAND performing really, really strongly. We want to follow these strongly performing cryptos. It's a license to print money if you can find them. And there are specific ways that you can do so. That's shared inside the masterclass. CHR just bottoming out at a level of previous support here. And we can see Theta under resistance as well. Ethereum Classic, just like Bitcoin Cash, just looking quite weak. And NEAR Just like some of the other cryptos we've seen, you get this divergence from gravity and then a pulling in and a realignment to gravity. It's really, really good stuff to actually understand how this pattern plays out. Looking at the community favorites, we can see Veracity is still under pressure, still under resistance, but it's following Bitcoin's gravity. This is why I say when people only want to look at one coin, they will naturally throw themselves into zone 1 or zone 2 behavior. That's a really, really high stress zone. You don't want to be in there. Zone 3 is all about looking throughout all the markets. Yes, it does take more time, but it's better than losing money. Icon is also under Bitcoin's gravity, but it has more strength relative to what we're seeing with VRA. Sushi is following Bitcoin's gravity too. IOTA doing the same. We talked previously about Loopring, about the magnificent gains that can be made when you have a very strong crypto that sells off. Phantom is looking quite good as well, and we can see a bit of a disalignment. We always have to be careful of Bitcoin's gravity when we see things like this. That's why we always buy at support levels below. That's a critical thing to do. Crypto.com starting to get above its once resistance line. This is looking really neat. And a particular community member reached out and said, can you look at RSR? I'd love to. In the masterclass, we have very, very specific ways of marking up charts and looking at things. I'm not going to do that here, but I wanted to show you what I saw. I saw this big move down, for example, about 86.13% over 94 days. Close to home, exhaustion. But look at the rally from 86% down to 269% up. This is a thing that a lot of retail traders and investors just don't appreciate. When you're buying at support levels down, you're lowering your average buy price. And when it gets back up, it can increase by orders of magnitude. That's something to be very, very aware of. When we see current price action, it's been coming down for about 53 days from that peak just there, just a little bit lower than this peak, that peak there. And what we can see, when price comes up, even if it just regains this, it's going to do really, really well. How well could it do? If RSR just gets to its previous level, it will go up about 260% from that bottom. That's really impressive stuff. People are always looking for 10x, 20x, 50x gains. But that's the concept, that you hold on to something for a really, really long time and it doesn't move against you. Trading definitely has its power. Please always remember Rule 444, ignore tips, advice, and marketing. Experts do not know your needs. They don't know what your financial situation is. When I look at a particular chart, it just is of interest to me, and I show you what I'm looking at. Nothing more than that. Tomorrow is a really, really special day. I'm going to announce the first 10 CTKS Ambassadors, and that's the highest honor in crypto technical analysis. Those people can actually give you special coupons that you will get massive discounts on the masterclass, as well as the fact that they're all absolutely wonderful people as well. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.